Howdy there, folks. It's a 5-piece here today. 5 little clips for me to react to. Want to react to the little ending part of this particular clip here, talking about Palantir stock and kind of give my opinions, perspectives there. Then I want to go into this one. Tom Lee went on CNBC last night and was speaking about several different subjects, so I want to go ahead and react to that one. Then we're going to go ahead and react to this little 40-second clip here of Jim Liebenthal buying Nvidia. I want to share my thoughts on buying more Nvidia stock or not, okay? Then I want to go ahead and get into this one, April's final consumer sentiment numbers. I want to react to that, kind of share my opinions and perspectives. Do we feel like there's a recession, stagflation on the way? And then some more inflation measures and economic data as well. Appreciate y'all joining me as always. Thanks so much for being here. All I ask in return, smash that thumbs up button here today, folks, and make sure you subscribe to the channel. Also, people want to always know my favorite picks on AI stocks. My 3 favorite picks personally for AI and the opportunity, the long-term opportunity of AI, are Palantir, Nvidia, and Meta. Palantir's a direct beneficiary, really kind of, I would put them almost in like the SaaS space. Nvidia, obviously, on the chip side, they're continuing to stay ahead of their competitors and come out with more and more advanced chips. They got, obviously, H200, that's about to ramp up here. And then I'm sure they'll be coming with H300 and keep building from there, right? And then when it comes to Meta, you know, the most indirect beneficiary of AI, because when you think about their algorithms, when you think about how their ads are served up, all those sorts of things, it's all AI in order to produce you the ad you're likely to click on, be interested in. So then the advertiser gets more money. So then what do? They go and spend more money on Meta. If an advertiser is getting a great ROI, they're going to spend more and more and more with Meta, right? And obviously in terms of their algorithms, making sure it pushes you content that you're actually interested in, that you'll engage with. So then you stay on the platform longer, which then means you see more ads. And if those advertisers get a great ROI, they just, you know, it's a beautiful, beautiful business model. And then what they're doing with Llama 3, oh my gosh. I mean, they could be building out what I think could be the AWS of AI long term, okay? So alrighty guys, let's go ahead and jump into this. Oh, by the way, 1000xstocks.com, we are now over 300 people on the wait list. So if you want to join the wait list to get in there, get access to that, 1000xstocks.com for joining the wait list.
Yeah, I mean, Palantir was an AI company before AI was cool. This is without a doubt. I think there's no other software company that has the scale of the military contracts. And I think it's a misunderstood company because that's what most people think it still does. They continue to get big awards from U.S. and U.S. Friendly countries. But really what I'm excited and why I bought the stock is what they're doing on the commercial side. They've been doing these within their AI platform, these AI boot camps. Last quarter, that was up 70% year over year. Their commercial revenue, just plain and simple, was up 30%. The stock made 3 cents, the earnings 3 cents last quarter. I think this is early days for them.
Guys, this is big. This is big. You know why this is big? We got a Wall Streeter here who knows the story of Palantir and is invested in Palantir and is excited, right? And, you know, Palantir used to be disrespected, used to be called a meme stock. Oh, it's just retail investors, traders messing around with that stock, right? Now, many more people have woken up, including Wall Streeters, and now they're starting to buy this stock. Very exciting.
A sales team to really go after the commercial traffic. I think that they're so trusted. Their earnings come out at about 9 or 10 days. I think this is one to watch. That has a lot more upside.
Shares are up 3% here today. Josh, you got a big one. Matterport soaring nearly 200% this week on deal news with CoStar to buy it for $1.6 billion. Congratulations on this move.
Yeah, Courtney, this is the worst investment I've made in the last 10 years. Down if let's say I hold it until the deal closes, okay. I get $5.50 mixed between cash and stock in CoStar. My average cost is $10.63. I'm looking at my lots now. I'm down in all of them except for one. My highest print was $19.94. So this is a 50% loss for me, even if I hold it till the deal closes. The good news is I think they did the right thing for the company. Congratulations to RJ on finding a solution because this was not going to make it as a standalone stock. I bought it in 2021. The world has changed. I shouldn't have held it. I did. but it's probably the best resolution they could have found. So don't congratulate me. I want to wear a bag over my head just talking about it.
Well put, JB. Well put. Let's go ahead and get into Tom Lee here.
Capital gains proposal we got last night. I think that might be sprinkled in here. But anyway, GDP's getting all the attention. Steve laid it out nicely. What is your take?
I agree with Steve's point. You know, the GDP number did catch people off guard. The core price index being basically a hot number, 2.9 year over year. But it is going to come down to the revisions, which everyone expects. I think there's also now a disconnect between the CPI numbers we're seeing and like what we hear from companies or even, consumer surveys. I mean, for instance, in just this first quarter earnings season, the mentions of inflation as a problem is now at the lowest level since the first quarter of 2021. So it makes me wonder, how is inflation accelerating when fewer companies are even mentioning it as a problem in the first quarter? I think that there are catalysts, in the next couple of weeks. I mean, the first one, of course, is tomorrow to see really what March inflation looks like. But I think the earnings backdrop.
Okay, let me push back against Tom Lee here, okay? Inflation, still an issue. And I'm not just talking about the government numbers. I'm talking about company earnings. You want me to give you two specific examples? Look at Southwest Airlines. I was running through Southwest Airlines with the private group today, as well as UPS and Caterpillar's earnings. And we were going through those three companies' earnings this morning with the private group, right? And I will tell you, Southwest Airlines has an inflation problem. Their expenses are way outpacing their revenue growth by a large margin, okay? Look at UPS's numbers. It's a dumpster fire at UPS. I'm talking horrible. Their expenses are way outstripping their revenue growth. So this belief that inflation is not hitting companies, these are some of the most important companies in the world. Is it hitting Meta or Google or Microsoft? No, they're not the type of companies that would really get hit like that, right? But I'm telling you, you go beneath the surface and it's no bueno. It is no bueno. So inflation is still an issue, folks. Is it the issue it was 18 months ago? 24 months ago? No. Is it still an issue? Yes, absolutely.
Actually been very supportive. 80% of companies are beating. So as painful as the last couple of days have been, and really the last couple of weeks, I actually think it's the risk reward's positive here.
So the firm landing is here, in my opinion. We did hear from Whirlpool. We did hear from Harley Davidson that they are having difficulty passing through rising input costs to the consumer. And that's not a bad thing. In fact, if you look at the price action today, right now, where we are in the market, we have recovered everything that we lost after the GDP print and after the inflation figures were released. So we've recovered it all. This is really where we sit in the marketplace right now off of Meta and the spending that's attributed to Meta. I think that the rest of the world is experiencing a disinflationary trend that ultimately is going to get exported here to the United States. Brian, you look at Europe, you're talking about inflation readings that are in the twos, whether it's France or Germany. Italy's at 1.2. Asia is in outright deflation. That's coming here, and I just don't think that's a bad thing. And the premise for buying equities in 2024 never was about the Fed has to cut rates. Because if it was, at the beginning of the year when there was 7 rate cuts priced in, now we're pricing in 1 rate cut, maybe in December, well, the equity market would be lower from the starting point. We're actually higher.
And John, jump in on this. Can we just remember the Super Bowl with the Falcons and the Patriots, and the Falcons are up like 100-0 at halftime,
28-3,
whatever, and then Brady comes back and wins. Can we all just acknowledge that the stock market is up this week? Even with today, we're still higher for the.
Yeah, but we got to diverge between the stock market and the economy, right? Here's the deal. Okay, if companies are having a situation where their expenses are going higher, and as he put there, those companies are having trouble pushing off that cost to the consumer, what does that equal? That's a very stagflationary event, right? If you're a business and your expenses are going up, but you're like, man, the customer's not really paying it, and that's very different than 2021 or even a lot of 2022 when, yeah, sure, expenses were all going up for companies, but they could easily push that off to the consumer. If now you can't, that's bad, right? And that's where job losses come in that situation, right? Is there some deflation in some areas? Sure, but it's not in a vast amount of areas. For instance, an area I see deflation is actually with things like software developers and folks like that, right? I built the Hungry Bowl app years ago. That was probably 2021? I think it was when I built Hungry Bowl app. Back at that time, developer cost was astronomically high. I mean, I spent hundreds and hundreds and hundreds of thousands of dollars on that app, right? And it was completely unsustainable but at that particular time, developers were so dang expensive. It was ridiculous. I can tell you developer cost has actually come down quite a bit for folks that build apps and websites and those sorts of things. And so like, for instance, 1000X, I've spent not nearly as much as my loss in Hungry Bowl was I think it was $750,000. And then when I look at 1000X, right, I've been able to build everything we've got with the conference calls, with the compare feature, with the other feature. I got other features being worked on right now. I'm telling you, not even close to the sort of price that I spent on Hungry Bowl. It was a massive, massive difference. So that's an area you actually see some deflation. But the problem is that's just like one little segment out of the economy. There's a massive amount of other segments that I can tell you they're not seeing that deflation. And like he said, like if you're a company, your expenses are going higher and you can't push that off to your consumer, at the end of the day, what do? You have to eat it for a short term, and then you have to start cutting employees.
We're only like 1% or 2% off all-time highs. Market has one big down day. Right?
Profit margins are strong. Everyone wants to focus on the economic recession that never happened. The real recession that happened that matters most is the earnings recession. And we've come out of the earnings recession in the second half of 2023 for the S&P and the NASDAQ. We're waiting on the Russell, and that's a catalyst.
Yeah, Tom, though, we've got a couple big names tonight. We'll get Dan's take on that in just a second, Dan Ives. But, I mean, what if Microsoft and Alphabet soil the sheets? I think is that the family-friendly term with the numbers tonight? I mean, then what? Because Meta kind of did.
Yeah, I mean, Meta was up 40% into the earnings report, so I think expectations were high. I think there has been sort of a reset, so I think there's if it's a beat, we could see stocks rewarded. And overall, it has been a good Tom. You're right. 80% of companies are beating, and if you really exclude energy, you're really pushing up against double-digit earnings growth year over year. So it's exactly what Joe was saying. It's been a pretty nice earnings recovery. And I think as you get into the second half of this year, healthcare no longer has negative year-over-year comps. So, you could be back into mid-teens earnings growth. So I think the earnings backdrop's really supportive, and there's still $6 trillion of cash on the sidelines.
Let's go ahead and I hate when they bring up the cash on the sideline thing, because, like I said, the far majority of that money's staying on the sideline regardless of what happens. Okay, so let's see what's going on. Oh, look at Nvidia. Did I not call Nvidia? Holy smokes! I told you guys, like, all these big tech companies. This is so freaking bullish for Nvidia. It's insane, right? But let's go ahead and take a peek. Google McDougal looking like it's having about a 10% move. Amazon's having a very nice move on the back of this. Mr. Softy as well. And as I put in the video on the main channel a day ago, 2 days ago, I said, this is before Microsoft and Google earnings came out, I said, the setup for Microsoft and Google is actually really good. And I said, the reason it's really good is because Meta reported, the stock went down huge, right? So a lot of the scared money was going to get out of Google and Microsoft because they were scared, right? They're like, oh crap, Meta was down like 17% after hours, I think at the lows, after they reported. So a lot of the scared money dumped out of Google, dumped out of Microsoft after hours and the next trading day, right? Which, if you already got the scared money out before earnings even come out, that sets you up pretty good. So then as long as your company does decent, right, which obviously Google and Microsoft reported very impressive numbers, then you have those same people that were scared buy back the stock, and all of a sudden stock goes up a bunch, and then you have new buyers as well, a bunch of buying pressure, and next thing you know, Google stock's up 10% here today, okay? Alrighty, so let's go ahead and get into this one.
On Nvidia, we're not going to hear from them for a little while, but nice price action today at 5%.
Well, yeah, I mean, we got a meaningful pullback over the last few weeks, and it's found its footing. It's going higher. I continue to think that the valuation on this name is actually quite inexpensive. And I know that at mid-30s, some people may look aghast at that, but just remember the earnings growth that you're looking at for the next few quarters is likely to be well above 30%. Folks, that won't last forever, but it is for the next few quarters. So I'm comfortable adding it here. I'm not, Courtney, just for the record, I'm not adding big positions.
That's interesting. He said at least for the next few quarters. That shows really still how bearish Wall Street is. I don't think they realize this is a multi-year spend cycle. Meta's talking about investing more aggressively over the coming years. Keyword years with an S, right? Same thing with Microsoft. Same thing with Google, McDougal, Tesla, all these companies. So this isn't just like the next quarter or two. Now, where do I see Nvidia stock price after they report? I'll answer that in just a moment. I just want to hear the rest of what he says here.
Okay. Because I do think this market overall is going to be choppy. I think we're still adjusting to higher interest rates. But I do think from here to year end, we're going to look back at this price target or this price level on Nvidia and feel it was a very good entry point.
So in terms of where do I see Nvidia stock going after their earnings, I've felt like Nvidia's going 1,000 plus. And I feel like it's either going to hit that before earnings or after earnings. I think that you're going to see 1,000 plus on Nvidia, then 1,200, and then ultimately 1,500. Everybody keeps talking about and thinking Nvidia is going to have this big down cycle at some point, and it will happen at some point. But the problem is these companies got to spend a fortune over the next several years with Nvidia chips. And so Nvidia is just very well positioned. And it's the strongest companies in the world buying from them. Tesla, Meta, Amazon, Microsoft, OpenAI, Google, like all the strongest companies in the world you could possibly want are buying Nvidia chips left and right. The Oracles, all these companies. And so those companies are just always loaded with money. They're so profitable regardless of what happens in the economy, inflation, deflation, whatever happens to these economic numbers. These companies put up phenomenal numbers. That's exactly who you would want as your clients, right? And that's who Nvidia is making all this money off of. Never mind international companies, governments as well. I mean, it's pretty dang good. Okay, now let's get into some economic data and see what's going on with the economy. Are we going into recession, stagflation? What's going on?
Final reads. So 2 weeks ago, we get the mid-month read. These reads have actually moved quite a bit, which is a bit unusual. So we go from our headline Michigan sentiment for the April final from 77.9 to 77.2. That brings it to the weakest level since February. If you look at
the fact that consumer sentiment's getting worse proves that inflation is still a problem. If inflation was not a problem, consumer sentiment would be improving right now. If you look back to, there was actually many months in a row back in 2023 where consumer sentiment was improving. And the reason being is inflation had started to come down from those epic levels of 2022. So the consumer started feeling a little better about things. But as soon as the consumer starts feeling, oh man, inflation hit me here. Oh man, it's not quite as much in my bank account. That is a situation where consumer sentiment then goes down.
It's last look, the mid-month was 79.3. This goes down to 79.0, weakest since December of last year. Expectations dropped a full point from 77 to 76, weakest since February of last year. February of this year. Now, inflation, and this also is interesting. The one-year inflation moves from 3.1 back up to 3.2. 3.2 is the hottest since November last year when it was 4.5.
So the moral of that story is inflation is higher than the government said it was going to be. 3.1 to 3.2.
5 to 10-year inflation is the only metric out of these five that remain the same as the mid-month read at 3%. And 3%, by the way, 3% was the highest level since November of last year. But it's back. It stays at 3%. Yields hardly moved on that, which is a little bit surprising. We want to pay particularly close attention to all yield moves this week, especially on a Friday after big movement to rates to the upside. Sarah, back to you.
So a lot of that data is worrisome, right? Very, very worrisome. It's not good. It's not good. I mean, there's two positive ways. If you want me to try to spin this into a positive, there's two ways you can spin it into a positive. Because if something's bad, you can try to look at like what's the good side. If something's good, you can try to say, well, what's the bad here, right? So if we want to spin this as any sort of good thing, it could get a lot better. Consumer sentiment's horrible. Inflation is still a problem. It could get better in the future, maybe a year from now, 2 years from now. So that's a bright spot we can look at. Another bright spot is we can say, okay, If, let's say, the economy is seen as getting weaker, then that means the Fed could be closer to cutting, which, would take a lot of this pressure off of, like, when's the Fed going to start cutting? When are interest rates going to drop? Those sorts of things, because that's still obviously a huge concern. Yields going higher. I mean, mortgage rates, I was looking at mortgage rates this year. It was looking like a 30-year mortgage rate was at something like, where was it? I think it was 7.25 or something insane. Like, if you're trying to buy a house right now, it is brutal, man. Brutal, because you're still dealing with low inventory. Prices are still pretty dang high compared to where they were just a few years ago. And you're dealing with a 7.2% type mortgage rate on a 30-year. Oh my gosh. So, there's a lot that could get a lot better. I guess that's the same thing we could say, but you could also say at some point the employment market could end up breaking for real. Key Fed inflation measure rose 2.8% in March from a year ago, more than expected.
Bye. Rick, take it away. Market's up ahead of the number.
Yes, we are waiting for, of course, the personal income spending, all the associated inflation metrics. This is a March number, looking for roughly up 0.5% on income, and it delivers. Up 0.5%, up 0.5% on income, up 0.8 on spending or consumption. And the 0.8 is definitely
not good. That means, people are spending, if anything, more than their income. So that's not good. Those economic numbers right there are not good.
The personal income spending, all the associated inflation metrics. This is a March number, looking for roughly up 0.5% on income, and it delivers. Up 0.5%, up 0.5% on income, up 0.8 on spending or consumption. And the 0.8 is definitely warmer than expected. It actually equals our last look, and our last look, that was the best since January of 23. So back-to-back 0.8% on spending. Of course, revisions still may be forthcoming. If we look at inflation-adjusted consumption or spending, called real personal spending, it's also up more than expected, up 0.5%. Up 0.5% equals December of last year. To find a bigger number, you have to go to January of last year. Now, let's look at the deflator, month over month, personal consumption expenditure deflator. Expected up 0.3, delivers up 0.3. In the rear view mirror, up 0.3. The deflator year over year, expected up 2.6. Our first number, that's hotter than expected, up 2.7. In the rear view mirror, still unrevised, up 2.5. To find a bigger number than up 2.7, you're looking at October of last year. Now, let's look at the deflator month over month, and this is a core number, expecting up 0.3. It is up 0.3, back-to-back 0.3. Finally, the year-over-year core deflator, also another year-over-year number, and another one hotter than expected, up 2.8. We're looking for 2.7. This was a very talked about number, maybe the most talked about out of all of them, and it equals our last look, which was 2.8, and 2.8 actually was the lowest. To find a lower number, you're going back to March of 21, so back to back. The only issue is, and of course, I'm sure many will say, making huge progress. The reality is it's stalling, and that is the issue. Nobody's arguing that progress hasn't been made. The issue is, what have you done for me today? And we do see some of these inflation numbers remaining sticky, albeit at lower levels than a few years ago, which doesn't mean there's no inflation. There's just less of it creeping in every month.
Very well put, Rick Santelli. And that's the issue we're dealing with here, right? That's the problem at hand. And so when I look at all of that, did I like any of it? No, I didn't like any of it. There's nothing there that made me say, awesome, nothing. So you as a long-term investor, I mean, what do you take from all this? Things could get a lot better in the future, right? But at the same time, it seems more and more like at some point the employment market's going to crack. It just seems like that, right? If people are spending more than they're making, if we're in a situation where these companies are still having expense problems, it just seems like it's just a matter of time before that employment market breaks. When does it actually happen? I don't know. We'll see. But it feels like at some point things have to crack there because the rest of it's just not adding up, right? But as a long-term investor, you can't get too freaked out about this stuff. It just is what it is. Sometimes inflation numbers are going to be way better than expected, and that's going to be, welcomed. But yeah, the Fed's not going to be able to lower yet, man. They're not going to lower until at the end of the day, inflation's really broken, which could still be 6 months away. I mean, when you're looking at these inflation numbers, and it's like it might still be 6 months or more before they really get to the numbers that the Fed wants inflation numbers to get to, right? Or the employment market has to really crack and start getting hit. And we ought to all of a sudden see unemployment go up to 4.5%, 5%, 5.5%. And remember, the scary thing about the unemployment numbers is when they do start to jump, they could jump very, very quickly, okay? Let me also tell you about a conspiracy theory. You want a conspiracy theory? It's a political one. It's a political conspiracy theory. So I was seeing some of the stuff out of B-Man this week, right? And the TikTok ban, I don't think a lot of people are going to be too happy about that, especially in the younger generation that love TikTok. And then I was looking at some of the proposals on upping taxes significantly, capital gains tax rate, and then even trying to tax on realized losses. And the more I was looking at that, I was like, I almost feel like B-Man wants out of office. Like I'm not trying to be funny. I'm being dead serious. I'm like, does he know something's going to come here? Because it seems like, if anything, he's trying to get out of office. If you're talking about doing these sorts of tactics, like you're going to turn off the wealthy that's got all the money and they're the donor money. And then you're also going to turn off the younger generation, which is a lot of what you would want to count on if you're in that political party there. And just like, man, maybe they want to get the other guy back in office and then dump a whole unemployment situation on him, right? I don't know. Like I was just looking at some of those things this week, and I was like, it seemed fishy. That's all I'll say about that. It seemed like the type of stuff you would do if you were trying not to get votes. Okay? So anyways, guys, much love as always. Appreciate y'all joining me. We'll see. It's interesting times nonetheless. We got crazy earnings coming up here this week, another huge week ahead. I mean, absolutely massive. This is what we're looking at. SoFi, PayPal, Amazon, AMD, Supermicro, Starbucks, MasterCard, Wingstop, the most overvalued restaurant stock out there. Estee Lauder. You got Apple reporting this week. Fubo. Obviously 3M. Mickey D's. I mean, the list goes on. It's going to be a crazy week. So I hope you guys are ready to rock and roll this week. Appreciate y'all joining me as always. If you're looking to apply, join my private stock group. Get access to all my best course curriculums. Access to 6- to 7-figure Discord chat. Level up your game to a much higher level. Check out the pinned comment down there. You can click on that, fill in an application. We'll see if we can get you in there next week. If you're looking to get access to 1000xstocks.com, go to 1000xstocks.com, fill out an application for that service. As of the features we have right now, we have the ability to see all the different metrics you need to know where things trade at. Also, we have the ability to compare 3 different stocks against each other and all the different metrics. We have the earnings call feature that you can even listen to it at faster speeds. I'm trying to add SEC filings in here, hopefully, and then a couple other things I don't even want to disclose yet. So the progress continues to be made there. Much love and have a great day.